Hello and welcome to a brand new episode of ETMarkets Smart Talk. Here we talk about market trends, investing yarn, as well as techniques on how to become an effective trader or an investor. Well, my name is Shraddha, and today we have with us Alok Jain. Now, Alok is a founder of momentum investing platform called Weekendinvesting.com. Now, Weekend Investing was the first SEBI manager on the smallcase platform. He has over 2 decades of experience in systematic rule-based investing system as well as technical trading. So welcome to the show, Alok.
Thank you so much, Hitesh. Thank you for having me on your show.
Right. Alok, let me just quickly get on to you. COVID has taught us many things, and especially for be it a real life person or the retail investor, staying put, help them create a wealth. You could say that. In fact, in COVID times, when we talk about, let's say, March 2020, the biggest lesson which in retail investors could have got was staying put in that particular time frame. Or you could say that. In fact, if I remember, we hit 7,500 back in March 2020, and since then it has been one-way journey, and that is on the upside. And the new breed of retail investors that we have seen now, they're pretty different of what we saw, let's say, 5 to 6 years back. So what are your views on that? You think that the transition has already come into this retail investing space?
Yeah, so it's a good question. I think retail space has changed for good in the sense that interest rates have been falling since many years. And, the TINA factor, the there is no alternative factor has been, blowing all over the place, with people realizing that, to get some returns over inflation, they will need to take risks. And while the COVID crash in 2020 did get people out of the market, but I think that also brought in a huge new gush of new retail accounts. True. And as you would know, Demat accounts went from a couple of crores to almost 7.5 crores. Yes. On Demat accounts. So more than 5 crore kind of new accounts have come in. And of course, they have yet to see a major market pullback. So, that experience will strengthen their long-term resolve when it comes. But for now, I think because there was no alternatives and people had savings, sitting at home, getting their salaries, yes, and having more time to focus towards the market, that I think caused this huge gush. And that's a very positive development for the Indian markets.
Absolutely a positive development for Indian equity markets. And this is one thing which, in fact, government has also recognized in one of the speeches. In fact, we saw Finance Minister Nirmala Sitharaman speaking about the same, that the kind of money which has come from retail investors or domestic investors is pretty huge, which has actually helped us absorb the shock of FIIs, pulling out money from Indian markets. Now, coming to another very important, point in the investing is how should one look at managing money at this point in time? Does a wide variety of stocks give a fair chance of cracking a multi-bagger? Usually, there is a saying, or when we talk to people, they said, okay, I have 20 stocks, 25 stocks, or 30 stocks. But we look at mutual funds, especially the bouquet mutual fund that we see. They have a small portfolio, and they say that keeping 10 to 12 stocks, maybe 15 stocks at max will help you make that money, rather than too much of diversification, getting a 50 stocks in your portfolio. What are your views on that as well?
So on managing money, I think it's a very broad subject. So what I would like to first say is that you should be looking at a very long-term approach when you're looking at managing money and starting that journey.
Yes.
Number of stocks is not so much important as much as recognizing whether your capability of identification of stocks, your exposure to the information from the markets, your time that you are able to give to the markets. Sure. Those things are more important. So you need to assess whether you need to be managing this yourself, or you need to be giving it to a professional manager to run it for you. So mutual funds are a very good example. Small cases are another very good examples. PMSs are, another good vehicles. So depending upon this life cycle of the investor, they may, start with mutual funds, move on to small cases, move on to PMSs, so on and so forth. But unless you are able to sort of gauge that, you are able to do those picks, you are able to do the entries, you are able to do the exits. How do you behave when the market is against you? How do you behave when, you are seeing markets go up every day? So all those behavioral aspects actually become very, very crucial in how you are able to manage money. And almost everybody goes through a very long learning curve.
Yes.
When they say, you have to pay learning fee to the market, that's actually true. And, over the years, over decades, you will learn making your own mistakes and learning from them. So my suggestion on managing money is that don't try to be your own manager to start with. Take professional help. And over the years, as you see the markets, as you read more, as you follow it more, maybe some part of it you can take over and run it alongside.
Right. And in fact, extending the managing money point, I have seen, in fact, I've also interacted with a lot of retail investors. And one thing is very common, they have a story for every stock. And that is something, or you could say that they're romantically involved in the stock process or the stock selection process. And they just don't want to let it go. If in case, if we talk it out or we suggest some technical indicators to them, or probably some fundamental factor has come up, then nobody tries to listen or acknowledge. And I'm sure this is one of the human traits that and it carries in investing as well. So how big this is a hurdle for long-term investment or long-term wealth creation? Do you see this as a hurdle, or do you think it's more it's habitual or psychological in nature?
So this is a huge hurdle. The fact that most people will do ad hoc investments and not have any framework for that investment. From framework, from what I mean is that, like for instance, in our momentum investing, we have a framework, what to buy, when to sell, and how much to buy. So the 4 questions we want to be answered at all times, and there should be no ambiguity. Right. Now, because we are doing price action-based strategies, it is easier to do this. Right. But when you're doing fundamental investing, there are 10,000 different variables that are going on. The company fundamentals, the management quality, there's industry trends, then there are global trends, macro trends, money coming in, money going out of the country. That is impacting so there are so many moving parts to that entire equation that it is very difficult to pinpoint where it's a good buy or a good sell. So you need a framework. So you need to decide, I will get in if this happens, I will get out if that happens. Right. And try to stick with that some sort of framework, because if you marry that stock, which most people are, that is a very difficult situation, because you've researched the stock so much, you've done channel checks, you've read everything about the company, you've eaten the products, you are totally married to it. I mean, even if the worst kind of situation is happening to that stock, you will still see bright spots in that story somewhere and think that, maybe it'll turn around, this is just a passing phase, so on and so forth. So having that emotional connect with that stock is actually extremely dangerous. And one needs to run their portfolio like a business, where you need to be cut and dry. I mean, if something is going bad, you need to cut that loss and get out of that part of your business. So emotions and business never go along well together, and the same happens with the portfolio as well.
Right. Very interesting point. Emotions and business does not go hand in hand together. Now, you talked about momentum investing. Now, let me dig deeper into that. You're a small case manager, and in fact, small case is a very good option available for retail to mix and match different styles, say value, growth, momentum, etc. So first, we would like to understand how does this momentum investing works, and how retail investors can help, or it helps them to build wealth over a long-term period horizon.
So let me just give you a very small brief about what small case is, because a lot of viewers are yet to experience small
Absolutely.
case. Absolutely. So small case is a platform which links all the major brokers on one side and professional managers like us on the other side. So it is basically a bridge where a retail investor can come in, use the small case platform and choose which advisory or research they would like their own portfolio to mirror. And then with a click of a button, they are able to mirror those researched model portfolios and run it in their own brokerage account. So you are neither parting with your money, the money stays with you, the stocks stay in your own account, and the full control of your portfolio stays with you. You are only taking advisory or research from somebody else and paying a subscription fee for that. So that is the small case model, which is a no nonsense sort of maybe a 1 minute or a 2 minute job per week or per month basis, and you can manage your portfolio. Now on this platform, there are hundreds of managers. There is all kinds of momentum, value, growth, different kinds of focus areas for each manager. So we were in fact the first manager on small case, and we have a focus on momentum investing. Now momentum investing is essentially a style of investing where we have a portfolio of stocks which chases the price action in those stocks. So we are not looking at the fundamental prospects of that stock, but we are saying that the price movement of that stock is able to lead us into that portfolio, what stocks we should be buying and what stocks we should be selling out. So there is a Gujarati saying called Bhav Bhagwan Che. So in short, we call it a BBC principle. So we are saying that the bhav of the stock is actually depicting whatever is the story inside that stock. We don't need any more narrative around it. As you would have seen many times, a good result when it comes out, the stock has already run up before that. Yeah. Or a bad result is coming out, the stock has already dropped, or a merger is happening favorably, stock has already run up. So a lot of times the stocks will showcase that ultimate event already in the price. And so why not follow that price instead and not wait for that news to happen? So that's what is the core essence of momentum investing. It is not trading. We have portfolios of 20 to 30 to 45, 50 stocks. And we basically look at the strength of each stock versus the rest of the pack and choose the ones which have the most strength. So it is basically like the survival of the fittest theory, where you are always staying with the strength of the market, and the weak stocks are always getting jettisoned out as exit. So you are never sort of stuck with weak stocks. So as soon as the stock starts to weaken, you are out of them and you are replacing them with stronger stocks into the portfolio. So this style of investing, it has been very popular since hundreds of years overseas, but in India, very recently in the last decade, we've seen good traction for this. And over the last 6 years that we've been running our research firm, we've got fantastic results. We've beaten the benchmarks in almost every product. So what we've seen is that this is a very no-nonsense kind of approach to investing, where you're not losing out on the returns, whereas you are not really getting any pain on the downside. Right. So you are crystal clear about what you're buying, when you're buying, how much you're buying, and when you're exiting. So that all that is very crystal clear about that in that model. So the small case platform is such that you just have to come to the small case platform through your broking account, choose an advisor or a research product, pay the subscription, and you will basically be able to mirror your portfolio to that model and run alongside that.
Right. In fact, so momentum investing helps you, sort of bring the best of both the worlds. So you're not actually giving away anything, but getting the best of everything. Yes, so I think that is something which is a key takeaway for retail investors. And Alok, it has been an insightful conversation, and I'm sure I'll pick your brains on other related valuation topics in coming few conversations that we'll have. But on that note, thank you so much for your time. And that's all, folks, for now. But do keep watching this space for more on news, business, and economy. Thank you so much for your time, Alok.